Cool, thanks. Now, the trade which I'm not so happy with, but which this is the one that Elena took and made hundreds and hundreds of pips, which was beautiful. So early this morning, we basically had, I put in a WVAV here just so we could look at it, but early this morning we basically had, looks like we're having the price begin to hit on the wall of the paper bag, looking like it wants to expand upward. Now, it'd been in a, we'd been in sort of a downtrend, but up until we now can see this, it actually started pulling back up. So right in here was where I took this trade. So it had actually started moving back in the direction. Everything looked like we're getting a positive slope. Even we had no clear direction of movement. So it expanded out here. It came back, did a retracement, and re-expanded out here with WAVEPM, the short-term velocity, beginning to expand upward, and long-term mass was very small. So it looked to me as if we had a really good instance that this may, in fact, my heart started beating fast. It looked to me as if that there was a really good chance that what we're going to see here is an explosion to the upside. And it ran up to here. I was basically able to get out because we have when you look at the bands, you can see both bands are starting to constrict. That we're basically looking at lateral trading. We have a re-entry into the containment zone. Everything is going down. So I just exited here and just didn't lose anything. But I was really disappointed. And this is, by the way, I want to say that Elena was looking at a 5-minute chart. The reason I didn't take the other trade that she made so much money on is it really did breach the third standard deviation, and then I was asleep by the time she made her trade.
Hey, I love it. Hey,
if I'd have got to here, I would have made some money. Yep.
Hey, Merrill. I do want to point out one thing really quick here, based on all of this, because I think there's one thing that's really important to know, and that's when we're trading underneath 0.5, 0.55 with WAVEPM, what we're really talking about is continued compression and or continued consolidation. And the thing is, if you were to, again, if you were to mark 0.5 or 0.6, 0.7, it's sort of, that's your, like on WAVEPM, if you were to blow up that WAVEPM screen, it's the 0.5, the 0.55, 0.6, 0.7 is where you really will start to see the burst of trending action begin. And if you look at what's going on here, especially with your long-term WAVEPM, you'll notice that push to, because remember, when you're pushing on a potato sack, you generally, if you're going to push on one side and you can't go, you're going to push harder on the other side to get out, right? Well, so what we're talking about here is you can see that basically on that upside pop there, where we weren't really able to trade above the second standard deviation. In fact, when we basically tested that second standard deviation and failed it, it is like that is the perfect tip-off, because we should always be on the lookout for before a massive trend moves, we should be looking for a head fake in the opposite direction. Everybody here should write that on a Post-it and put it on your computer screen. Before a massive breakout or breakdown, it's very likely that there's going to be a head fake in the opposite direction just beforehand. And the reason for that is because it gets volatility going. It gets volatility on the move, and then it's that failure of the second standard deviation and the first standard deviation containment zone, which really basically indicates that that the move that was a previous head fake. Well, why does that? We ask ourselves, why does that head fake create such a torrid move in the opposite direction? Well, the reason is because it looked like a breakout, and so many people got in the exact same position, going thinking that it was a breakout or a breakdown. And the thing is, when it fails, when it starts to drop below that mean or drops back into the containment zone en masse, and again, this is part of the reason why those mean regression snapbacks come so quick, is because obviously, if you're trading above the first standard deviation and then you fail the first standard deviation, like the market is going to dump their positions, in which case you just accelerate the movement back to the mean. Well, what happens if that movement is accelerated quick enough? It means that you're going to shoot right through the mean and then out to the other side of the teeter-totter. Well, so that's where we see usually the volatility expansion sometime just before or just at the test of the opposite side. And basically in this situation, we're looking at a 15-minute chart here, but if you looked at a 5-minute chart, you probably would see volatility expand throughout the entire thing. Or maybe, perhaps a 30-minute chart. But the other side too is that, if you think about it, so all of those people who were getting long right there, and then all of a sudden you have that failed breakout, what do they have to do with those long positions? They got to dump them. And so that it's the dumping of those that accelerates that movement right through the other side. And it's always after a long period of consolidation. Whenever I see those positions, I ask myself, is this the head fake that is going to rocket us out the other side of the distribution? Because will it provide enough volatility in the wrong direction to basically create a short squeeze or a long dump to basically be able to accelerate momentum. So I just want to point out there the other side of that too is again WAVEPM on the 15-minute chart. I think that's what we were just looking at a 30-minute chart. If you see that basically after a long period of consolidation, and we see that WAVEPM is accelerating, but we really have not moved above 0.5 or we haven't moved above 0.6. And then basically we fall into the containment zone. You can sort of assume that's you want to keep a close eye, but you can assume that head fake or that move was indeed an opposite direction head fake that is going to get volatility moving to a rocket through the opposite side of the distribution.
So I thought this was the head fake. We've talked about that enough that I'm sort of paying attention to head
but
fake.
If you even
I
right
thought
here,
this was the head fake.
If you look, the only problem here is that if we take a look at what's going on there, that if you look at where WAVEPM is, it is still so far underneath 0.5. It's still technically in a downtrend. Like basically, if we were to, if you collapse this a little bit, and then draw descending resistance on WAVEPM right there, on your wave, PM proper and tag your high on the very, very left-hand side of the chart, all the way, on your long-term wave PM, on the blue.
Oh, okay.
Nice. So now, if you basically map exactly where WAVEPM breaches, notice that exactly at the point where you see, is that just a coincidence that both short and long-term resistance or long-term mass both rocket through that descending resistance line, exactly one almost at the precise same point, but two also exactly where we start to see the massive sell-off begin. So basically what we're saying is that, this is, again, you're going to see these sloping, especially in long-term WAVEPM, you're going to see these sloping bulls.